Hello and welcome to the Cryptocurrency News Channel. We're going to talk about the TAFA, MA, and another thing also for December 10th, 2021. So if you look at the signals on the daily, they're all pretty much sell. We're barely at 47,000 right now. So I think the weekend is going to be painful, it looks like, because we're far above the 200 EMA. We're still above the 200 SMA, but we're quickly falling below that too. So I think we could possibly fall to 42,000 very quickly over the course of the weekend. But even if we do fall below that, I do think we're going to pop up pretty quickly. The RSI and the stochastic for the technicals are actually all neutral, but they are getting towards the oversold part. The commodity channel index is a buy because it is kind of like oversold. But however, the average directional index, although not very strong at 32, has gotten significantly stronger from about 23 over the last few days. So I can kind of see like a trend forming to the negative. So that's definitely not very good, the average directional index right now, because the average directional index is actually increasing while things are actually getting more negative. Not very good. The awesome oscillator is getting more negative and to a significant extent. So daily is very, very negative. I think the oscillators right now say it's actually pretty negative on the daily. In terms of moving averages, it's even worse. The exponential is lower than the simple for the 10, and plus our current position is actually lower than the exponential for the 10 as well. Same thing goes for the 20, the 30, the 50, and even the 100, and not quite the 200, but we're below the 200 EMA when we're going to fall below the 200 SMA most likely within maybe a couple of hours. So it is basically bearish pretty much all the way down in terms of moving averages. So I would say like we're at a pretty strong sell point right now if we actually look at the indicators right now for the daily. For the weekly, it really depends on what you. It really depends what you want to look at. The oscillators are pretty much neutral. The exponential moving average and the simple moving average. The exponential is lower than the simple. We're lower than the exponential. That's bad. And kind of same thing goes for the 20. The 30. The exponential is still higher than the simple. And yes, we are lower than the exponential, but higher than the simple. So when you get down to 30 weeks, it's kind of mixed. In terms of 50 weeks. I do think like we are more bullish, but we're still below the simple right now. So the indicators for the weekly, even when you go back a year, is changing more for the negative. So maybe like this week and maybe like next week is probably going to be pretty negative too. Obviously, when you go down to 100, 200, that's usually pointless because that's like multiple years and you can't really look at crypto across multiple years. So weekly, I would say it's leaning towards negative right now. Maybe you want to wait a couple of weeks. Maybe you want to wait until it drops down to 42 first, liquidates the longs, and then pops back up before you buy. If you actually look at the monthly, it's still fairly strong. But monthly is like really, really long outlook. Relative RSI, stochastic, commodity channel are all neutral. Average directional index, still positive, but monthly is pretty much always going to be positive because like if you take a back look at that long, unless you have another 3-year bear market, the monthly is not going to veer towards sell. So we're still above the exponential, only slightly for 10 months, but the exponential is lower than the simple, and we're actually lower than the simple as well. So even on the 10-month one, it's kind of sketchy right now. But of course, 20, 30 months, more than that, we're definitely on a buy. So right now, for all intents and purposes, unless you're planning to hold for like 2, 3, 4 years, the indicators don't look that great right now. But despite the indicators not looking great, another important statistic, the total Bitcoin hash rate, is actually looking good right now. The total hash rate, which the price follows and it correlates to a lot, actually just hit an all-time high. So while we actually may liquidate down to 42K, we could actually get a very fast recovery after the liquidation to 42K because the hash rate actually determines what the lowest possible value of Bitcoin can actually be for it to be profitable. And Bitcoin can't stay below that value for very long because it can't sustain that in terms of the Bitcoin industry. So it has to be above that. Right now, I believe at this hash rate, that price is around $37,000 a Bitcoin. So that is probably the absolute lowest line. Will it actually get to 37,000? Probably not, but maybe. Also, it might actually dip below that on a flash crash, but it would recover very, very quickly. So 37 is the bottom mark right now. And if the hash rate keeps going up, then we're going to see like 40, 42,000 be the bottom mark. And, and that, like, as the bottom mark rises, there's also more potential for a top that's way, way above, like 2 or 3 times above. So at that point, at that thing, I do actually believe, according to the hash rate, even though the technicals are very negative, and they could definitely liquidate down to 42,000, maybe even 37,000, and then like it could pop back above 100 once we liquidate those and we start going up, because the bottom line for what Bitcoin can actually be for any length of time is actually rising, despite the technicals looking very, very bad. Also, overall, the fundamentals, like, they're still getting to more adoption. The ETF is going to completely just kind of be in the works for the next year or two to see if we can get a spot ETF through. And generally, like, more congressmen obviously are more bullish about Bitcoin and cryptocurrency. The industry is getting some help. I think the India FUD is scaring us a little bit. Evergrande maybe scaring us a little bit. But overall, that's kind of how I see the look. Like, despite the technicals actually being down maybe for the daily and even the weekly for quite a while, so the rest of this year may actually not be that good. But in the next 2-3 months, I believe that the hash rate, if you look at it, that will actually prop up the floor for what Bitcoin has to be at the minimum. And because of that, I mean, the only way you're going to get a hash rate collapse is if like another country bans Bitcoin mining, which no country has as big effect as China, so that's not really going to happen. But because of the hash rate determining that the minimum price for Bitcoin has to at least be set 37,000 and probably above 40,000 in a couple of months, I think that bounce off the bottom might actually take us over 100K within the next 3 to 4 months, but it just may not happen this year. So that's the technical analysis for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.